Following the advice of a world-known investor like Warren Buffett, he will tell you that you should put your money into the market, or the majority of your money into the market. And you can do that by investing in a market index. But what exactly is a market index? Well, first of all, I would like to look back. Over the past few weeks, we at Lead Pass Investment have been looking at investment opportunity like mutual funds, where you have a collection of companies that you can invest in with a single investment vehicle. You have an ETF, which is very similar to a mutual fund, but is less actively managed, where you don't have a management fee, and it basically mirrors an index or any other type of investment strategy. And last but not least, which is very easy for us, is the tax-free saving account or the tax-free brokerage account, which you can pretty much set up within minutes and start putting your money into the market. And by doing so, automatically, you should be growing your money, right? But let's think about this. If you put your money into the market, where exactly is your money actually going? Well, if you think about Sunday mornings when you were a child, where your parents would drag you to the food market, and it would be one of these weird excursions that people would get excited about, but you would never really understand, that's not really what you're investing in, right? Or even worse, it could be the fish market, where you are investing in fish, a stinky, stinky place where, again, people are getting really excited about the products that are being offered. Well, obviously that's not going to be the case. You will be investing in the financial markets. The financial markets provide us with a number of investment opportunities, one of them actually being the markets that I mentioned earlier by investing in commodities. You can also invest in more current things like the crypto market. Or if you want to go down the very creative route, you can invest in private equity opportunities and start investing in movie creation, for example. Or what we focus on as Lead Pass investors is investing in companies. But if you throw your money into the market, you can't really invest in all the companies, can you? Well, actually, that is possible by investing in an index or an index fund. But what is an index fund? An index fund is a number of companies drawn together that represent a specific market. In our example today, it's going to be a specific country. So in a country, you can have an allocation of companies in this fund with different weighting. For example, the red company is more relevant in this country than, say, the orange market. And the green market and the purple market, the green company and the purple company are also highly relevant. So this means that the red, green, and purple companies have a high impact on the performance of this specific index. So if the red company does well, the index will very likely do well. So let's look at this at a global scale. Can we invest in all the companies? Well, the MSCI World pretty much measures all the developed countries and says this is how not only the countries or the companies in these countries are allocated to the world, but how much weight do different markets have in the entire global economy. As you can see, the USA is very, very prominent with 65%. The next biggest market is Japan, followed by the UK, France, and Switzerland. These are the most influential markets in the world because they have the most money in them. And that's also why we talk about the USA the most when we talk about investing. But again, am I investing in this index, the MSCI World, or can I invest in specifically these countries, sorry? Well, yes, you can. We've talked about the S&P 500 a lot, which you've probably seen quite often, which represents the 500 most influential companies in the US market. The Nikkei 225 has the 225 most influential companies in Japan. The FTSE 100 does the same thing for the UK. I guess you've already recognized where we're going here. The SMI has the 20 most influential companies of Switzerland, and the CAC 40 represents France. Now, what does this tell us? Well, first of all, we can already see simply by the number behind the index name of how many companies are in this index. This already tells us how large this market is, how large this country's worth is on the stock market, and how influential they are. That means the S&P 500 will always be more valued than the SMI 20. So for us, what does this tell us? Where will I put my money? Well, again, we can analyze this even further. We can zoom into one of these specific indexes and figure out what we know and where we're putting our money. Let's take an example, the SMI 20. I'm Swiss, so this is a perfect example. And I would like to talk about the Swiss market a little bit more. But first, what do we know about Switzerland? Well, Switzerland is famous for its mountains, the skiing that you can do there. We have Roger Federer, which is a tennis player. We have big banks, we have chocolate and watches. Those are the things that we're most famous for. So I would probably assume that the SMI 20 is heavily weighted towards these things. Now, I'm not just saying this. I actually took Luke and Adam here to the Paradeplatz in Zurich, which is the headquarter of Credit Suisse and UBS, and the entire street is filled with other headquarters of large banks that are represented throughout the world. And I don't just say this because I'm Swiss, but it's actually proven in other areas. The biggest example for me is in The Wolf of Wall Street, where Leonardo DiCaprio or Jordan Belfort find a way to hide their income from taxes by talking to this shady gentleman on the right. Now, one of the things that's really annoying to me as a Swiss person is that in The Wolf of Wall Street, behind Leonardo DiCaprio right here, you can see this fountain, which represents that it's actually Geneva and not Zurich, and it is a spit in my face, as I come from Zurich and I believe that Zurich is the capital of banking and they should have chosen that instead. But anyways, that is just a side note. So let's get back to that SMI. Thinking about these banks being headquartered in Switzerland, they must be the most valuable ones and the most heavily weighted ones in the Swiss market index, right? Well, that's actually not the case. Roche accounts for around 17% of the Swiss market index. Novartis is exactly the same, also 17%. Both these companies are huge players in the pharma industry. So they create the aspirin you take when you have a headache, or the antibiotics that you receive from your doctor when you have a different health issue. So already very surprising, and especially consider that this accounts for 40% of the entire Swiss market index. That is a huge number. So if pharma does well, so does the Swiss market index, which is not something that you would expect. Another huge company in Switzerland is Nestle. They produce food products ranging from chocolate to cereal to a whole bunch of other different consumer goods that we use on a very daily basis. They are also a huge global player. And again, not a perfect example of what Switzerland stands for. Now, we already identified that these three companies account for 60%. Again, Nestle also has pretty much a 20% share in the SMI. That these three companies have two separate industries that dominate the Swiss market. And it's not something that we would expect. Now, this is very important, especially considering if I would have decided to put my money in the Swiss market index and expected chocolate and banking to be important, that it's actually not representative of what I think it is. Now let's look to other indexes or indices. We have the MSCI USA. This isn't the S&P 500, but it does also take the most influential companies into account and would include a similar allocation of companies as the S&P 500 would. Now in the USA, we have information technology, which accounts for 27% of the MSCI USA. And that's our Apple, Microsoft, Amazon, Facebook, Google, and Tesla, which we've talked about previously. Healthcare is also large in the USA. And The third biggest player is consumer discretionary. Now, if we compare this to Japan, we would probably assume that it's a similar picture, correct? Well, industrials is actually the front runner. So something not mentioned at all in the top 3 of the MSCI USA. Japan is very heavily weighted on its industrials, but it also includes consumer discretionary and information technology very heavily. Now let's look at the United Kingdom. The United Kingdom is actually very, very different. You have consumer staples, which are daily consumed goods, accounting for 20%. Financials also accounting for 20%. And raw material accounting for 12%. So this is a completely different picture than Japan and the USA. Now that we know this, let's look about some other things that are going on. Great Britain has recently announced Brexit. So we have increased taxes and more problems when you're looking at import and export. And especially considering that Great Britain, according to the FTSE 100 or the MSCI GB, their market is actually heavily focused on consumer staples, so goods that we probably import and export, or mostly export. You have the financial services, where after Brexit was announced, a huge share of about 8 billion euros was transferred from the London Stock Exchange to the Amsterdam Stock Exchange because people didn't want to deal with Brexit. And you also have the same problem with raw materials when you're considering the import and export. Now, this is a huge problem and could potentially be indicative of what will happen with the entire economy in Great Britain going forward. Now, considering all these things that I just talked about, what does this really tell us as lead pass investors? Well, number one, think about where you put your money. You can't simply put your money into a market index and know where it goes. We have to do the research and really be sure of what we're investing in and whether or not we believe in these areas. Number two, analyze the market that you actually are investing in. It can be very surprising about what you see when you look at these market indexes and figure out, well, this isn't actually what I expected, and this isn't something that I want to invest in, or something that I definitely want to invest in. Japan might be a better market for you to invest in than the USA, for example. And last but not least, if you are a lead pass investor and you're looking for companies to research, an index can provide a very, very valuable source of potential companies for you to research, because an index takes all the most influential companies and puts them together into one place. So that is a very valuable source of research. Now, does anyone have any questions?